Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 11th of April, a 4-day week as we go into Easter. Certainly in terms of the markets, volatility remains the key word. We had some Federal Reserve minutes out earlier in the week, which, while they were more hawkish than had been anticipated, nonetheless provided some clarity to investors who can now position their portfolios accordingly. It rather seems that the rundown of the Fed's book, along with the raising of interest rates to combat inflation, could be rather more aggressive than initially expected. That being said, it's resulted in something of a dash for defensive stocks, which yet again is playing into the hands of the FTSE 100, full as it is of mature cyclical industries. Of course, the big concern in the background is no apparent end in sight to the conflict between Russia and the Ukraine. So, in the year to date, the FTSE 100 continues to be the outperformer compared to its American peers. The Dow Jones is down 4.8%, S&P 500 down 5.6%, Nasdaq down 11.2%, FTSE 100 up 3.4%. Turning to next week in the States, the first quarter reporting season starts in earnest. As is traditionally the case, we're going to be hearing from any number of Wall Street banks, the likes of JP Morgan, Citigroup, Morgan Stanley and Goldman Sachs. In the UK, there's a couple of interesting corporate updates to look out for. Firstly, a half-year trading statement from easyJet. The latest round of cancellations due to staff shortages is just adding to a litany of woes which the airline has experienced over the last couple of years through COVID, flight restrictions, and even latterly, of course, the strength of the oil price. So in terms of the trading update, any good news would be welcome, be that in terms of increasing passenger numbers or indeed revenue. Shares are down around 36% over the last year. There's also some full-year numbers due from Tesco. Shares here up 16% over the last year. Had an extremely strong festive period, so it'll be interesting to see whether the momentum has carried on into 2022. They've been ramping up their online capacity to be able to fulfill well over 1 million orders per week. And in the meantime, a couple of recent sales has left the company in a strong position cash-wise, and indeed the dividend yield of 3.4%, pretty attractive in the current interest rate environment. So retail operating profit of somewhere between 2.5 and 2.6 billion pounds is expected. Thank you for watching. Have a great week.